It's official, Ontario's housing market is now in a full-blown correction. Prices have fallen to a 4-year low. Inventory is piling up across the province, and what we're seeing right now is not a blip. It's not seasonal. It is definitely not temporary. In fact, whether the media wants to admit it or not, Ontario may already be in a multi-year housing recession. And this is the kind of recession we only see once every couple of decades. When the market resets hard and everything we thought we knew about real estate gets tested. And no, this isn't fear-mongering. This is the data speaking. Inventory is at the highest levels that we've seen in years. Prices are down double digits in some regions. Demand has dried up and developers are canceling projects because the math just doesn't work anymore. So in this video, we're going to unpack what's really going on and why the next 12 to 18 months could be the single biggest buying opportunity Ontario has seen since 2008. We're talking about why prices are falling faster than people think, why listings are exploding across the province, why buyers have stepped back in a massive way, why developers are quietly panicking, and most importantly, what all this actually means for you. Because here's the truth, Ontario did not arrive here overnight. This downturn has been building for years, and higher interest rates didn't cause this crisis. They simply exposed it. When money was basically free, anybody could qualify for anything. Investors could throw darts at the map and win. Pre-construction buyers could flip paper without lifting a finger, and homeowners could upgrade without ever worrying about the payments. But now we've entered a new world. A world where borrowing costs matter again. A world where speculative demand has evaporated. And a world where fundamentals, income, cash flow, affordability, and job security suddenly matter more than ever. This is why you're seeing cracks everywhere. This is why you're seeing prices drop in a market nobody ever thought would drop. And this is why sellers are beginning to panic. Buyers are staying patient. And investors, well, a lot of investors are underwater. So buckle in, because once you understand the forces driving this correction, and once you see the numbers for yourself, you'll understand exactly why this isn't just another soft patch. It's the beginning of Ontario's biggest housing reset in over a decade. So let's get into it. Here's the first thing we need to understand. Ontario's housing market didn't collapse because of high interest rates. It collapsed because those rates exposed how fragile and how over-leveraged the system already was. For nearly a decade, the market was kept alive by cheap credit, speculation, FOMO, and desperation. Every buyer believed that they had to outbid 5 other people. Every seller believed that their home would sell within 24 hours. And every investor thought prices would rise forever. But that wasn't a normal market. That was a bubble inflated by artificial low rates. When rates finally increased, even modestly, the system that depended on cheap debt instantly hit a wall. And now we're watching that entire decade unwind in real time. Prices didn't just soften, they fell hard. Ontario home prices are now 20% below the 2022 peak, wiping out almost every entire pandemic gain. In some markets, it's worse, 25 to 30% declines from the peak values. If you bought in 2021 or 2022, you paid the highest prices in Canadian history. And today, a huge portion of those buyers are sitting on negative equity. But here's the important part. We're not even at the end of this correction. We're in the middle of it, because the biggest force in this entire market hasn't even hit yet, which is the renewal wave. Between 2025 and 2026, hundreds of thousands of Canadians will renew their mortgage at rates 2 to 3 times higher than they were paying today. Some people will see payments rise by $1,500 to $3,000 per month. Even households who are financially stable will simply not be able to absorb that. When that happens, they have 3 choices: sell the home, extend amortization, or drain savings and hope that rates drop. Many will choose the third option first, but eventually some will have no choice but to sell. And when they do, that adds even more supply to the market already drowning in listings. This is how corrections accelerate, not through panic, through math. Now, let's talk about inventory, because rising inventory is the biggest sign of a weakening market. And right now, Ontario's inventory is exploding. Active listings across the province are up massively year over year. In the GTA, inventory is up around 40%. In some suburban markets, 60 to 80%. This isn't casual supply, this is real supply from investors underwater on cash flow, from pre-construction assignments people can't close, from households hit by renewal shock, from families downsizing, from people leaving the province, and yes, from developers dumping units. And that brings us to another painful truth. Developers are waving the white flag. Developers are long-term thinkers. They don't panic, they adapt. And right now they're canceling projects, delaying launches, offering unheard of incentives, and returning land options. This is not confidence, this is survival mode. And the biggest alarm bell of all, Ontario admits it will miss its home building target by more than 80,000 units over the next few years. That's not a small miss, that's a total collapse of the plan. When construction slows, jobs disappear. When jobs disappear, demand weakens. When demand weakens, prices fall further. This is the feedback loop Ontario is stuck in today. And on top of that, buyers' demand hasn't just slowed, it's frozen. Even with prices falling, affordability is still the worst it's been in a decade. High borrowing costs and weak wage growth have taken buyers out of the game entirely. They don't trust the market. They don't want to catch a falling knife. They'd rather save and wait. That's why I believe Ontario is already in a multi-year housing recession. Not a crash, not a collapse, but a long, grinding reset. With low prices, high inventory, weak demand, and slower construction. The signs are everywhere. Falling prices, listings rising, sales at a multi-year low, developers canceling projects, investors losing money, renewals creating forced sellers, and consumers losing confidence. You don't need to be an economist to see where this is going. The Ontario housing market is resetting, not for 6 months, not for a season, but for years. And this brings us to the most important part. What does this mean for you? Let's break it down. For the first time home buyer, the next 12 to 18 months may be the best buying window that we've had in almost 20 years. Prices are falling, inventory is rising, competition has evaporated, and sellers are negotiating again. For the first time in a decade, you have leverage, you have time, and most importantly, you have choice. If you're a homeowner with a renewal coming up, don't panic. And please don't sign the first renewal offer your bank sends. It's almost always the worst one. You have options. You can restructure. You can blend. You can extend your amortization temporarily to create breathing room. Renewal shock is real, but with a plan, it's manageable. If you're an investor, here's the hard truth. The negative cash flow, appreciation only strategy is dead. The next decade belongs to fundamentals. Cash flowing duplexes, semis, multis, strong rental pockets, and sustainable financing. The easy money is gone, but solid, strategic investing, that opportunity is just beginning. And if you're a seller, the market has changed. Pricing high and waiting for 20 offers will leave your listing sitting for months. This is a skill-based market. You need proper pricing, proper preparation, and a proper strategy. So where does this leave Ontario? Very simple. It's in a new era. Not a crash, not a collapse, but a reset. A long overdue shift back to fundamentals. An era where homes don't sell in 24 hours. Buyers take their time. Investors examine cash flow. Developers rethink projects. And the average family can finally breathe again. The next 12 to 18 months will define the next decade of real estate in Ontario. And if you stay informed and make smart decisions, this correction could be the moment you make one of the smartest financial moves of your life. And if you want help navigating your renewal, exploring buying opportunities, or understanding how this market affects your next steps, you can book a time with me at meetjustin.ca. I'm happy to walk you through your options. I'm Justin Chausse from the Chausse Mortgage Group. Thanks for watching. If you like this video, please hit the like and subscribe button so that we can continue to make more videos like this for people like you. Thanks for watching, and I'll see you in the next video.